Welcome to East Asia Pulse, a podcast series by the East Asian Institute at the National University of Singapore. I'm Alfred Schipke, the director of the East Asian Institute, and I will be your host today. We're very delighted to have Mr. Vasudevan as our guest. If I may, Vasu, among friends, is the executive director at the Reserve Bank of India, the RBI, and maybe we can actually call you Mr. Payment Systems, since you have been working extensively on the development of payment systems in India. You were instrumental in building and developing institutions like the National Payments Corporation of India, the Clearing Corporation of India, and the Reserve Bank of India's Innovation Hub, and have represented the RBI in many international fora. But you're also currently handling activities related to fintech, including the pilot on India's central bank digital currency, the e-rupee, and the Unified Lending Interface, ULI, among others. I'm very excited, Vasu, that you're here today to share a bit about where India is, where it wants to go, and the challenge that come from abroad, including by the latest developments in the United States with the push for crypto and stablecoins. Welcome, Vasu, and thank you very much for talking to us today.
Thank you, Professor Alfred Schipke. It's my pleasure to be as well here. And these are very interesting times and discussions that we can have on various aspects relating to payment systems and other developments relating to CBDCs. And I will be very happy to touch base about our initiatives like Unified Lending Interface and similar what we call digital public infrastructures that are being created. We can discuss about all these things. Thanks for having me here.
Thank you very much. Let's just jump right into it. First of all, thank you for joining us here in Singapore today at an event that we had on China-India, focusing on growth, investment, and trade in the context of global uncertainty. But our discussion today is very much focused on digital and payment systems. And there's a lot of interest in India and the success of India's payment systems. Its sheer size, efficiency, cost-effectiveness has made it an envy of many. Could you share with us a bit about what makes it so special and where we are today and where you think it should go?
Yeah, you are very right. India is a very massive country, 140 crore plus people. And the expectations are also quite high because India is a very young country in terms of its demography. And over a period of time, there have been wonderful initiatives that have been taken to see that the expectations of the people are met. Here in this discussion today, I'm going to restrict myself to the payment systems related part of it. Just to put it in context, India on a daily basis processes over 75 crore or 750 million transactions. This is in terms of number I'm saying, and these are all digital transactions. And we have many payment systems that are part of this particular ecosystem. Some of the payment systems are run by the Reserve Bank. The large value payment systems, what we call as the RTGS, Real-Time Gross Settlement System, the NEFT, the National Electronic Funds Transfer System. There are other payment systems that are run by the NPCI, the National Payments Corporation of India, which is an umbrella organization for retail payment systems operating in India. The NPCI operates very popular systems like IMPS, which is a fast payment system, then the UPI. Sometimes I have been saying that the RBI may be known less in the country and NPCI and UPI may be known more. That's how UPI has become so popular. And the UPI in the month of August alone has processed over 2,000 crore transactions. And I'm talking this in terms of number of transactions. And UPI has around 80+% share of the total digital payment transactions that happen in the country. That is the enormity of the issues and the volumes that get handled. One more thing I just thought I will highlight here is all these payment systems run 24/7 by 365. And India is one of the few jurisdictions to have many payment systems that run 24/7 by 365. And these developments have given us a lot of advantages in other areas as well, which I can explain a little later as to what have been the benefits that we have derived from this.
Now, India has also had a successful pilot now in the context of India's central bank digital currency, or the e-rupee, including for retail transactions. Where do we stand today? How successful has it been? And how does it compare to India's unified payment interface?
We have launched the pilots in CBDC, what we call as central bank digital currency, or also known as e-rupee, in November 2022 and December 2022. We started with the wholesale segment, and then the retail segment happened immediately thereafter. And over a period of the last 2.5 years, there have been many learnings from the pilots. I just want to mention that UPI is a payment system, whereas the CBDC is currency in itself. UPI allows commercial bank money to be transferred, while CBDC, on the other hand, as I mentioned, is money in itself. And CBDC has the liability of the central bank backing it. Just imagine the money that moves physically can now move digitally using the CBDC. Over a period of these pilots, we have had tremendous learnings, and we are leveraging the learnings to do many more things as well. For instance, retail has got some pilot banks that are participating, and over a period of time, we have increased the number of pilot banks that are participating. CBDC is also being accepted by more and more number of people. The wallets that are being opened are also being used by many Indian citizens. And what we also have been doing is that because of the experience people have, the positive experience people have by using UPI, we've also made CBDC interoperable with UPI. And UPI can be seen as a payment system, as I said, but digital rupee can provide a parallel payment rail that can decongest the UPI rails in case required, and also act as a backup to it whenever we need. The benefits that are available in CBDC include, for example, the programmability element. Like you use the physical money for a specific purpose to pay for a particular need. You allocate your salary or your earnings by budgeting it for various purposes. Similarly, CBDC can be facilitating this to you by letting you program the purposes for which you can use the balances in your wallet. For example, somebody could say that I would like to use 100 rupees of CBDC for paying my fitness allowance or a gym subscription. Somebody could say that I want to use a portion for paying my ward's school fees. All these things can be facilitated by CBDC, where the end use of the money can be programmed. If the money is being accepted by a specific set of merchants, it is possible for CBDC to whitelist such merchants so that the money gets to be used only at those establishments. Similarly, it is also possible to ring fence in terms of a geographical area where this money can be used. Let's say I want to use the money only in this particular hotel or in this particular city. That can be done because CBDC programmability feature enables you to do so. Yet another feature that's possible in CBDC includes the period up to which you can use the money for. If somebody is using money for a 3-month period, if an allowance is being given to be used by the end of the month, it can be programmed in such a way that the money expires after the end of the month if unused. This is particularly useful in the Indian context, where we have been recently seeing the state governments and also the central government using CBDCs to give the direct benefit transfers for specific use cases. And there are many pilots that are running in this particular aspect, and all these things are facilitated because CBDC facilitates such programmability to be brought in. It is also possible going forward for us to make these features programmable by the users themselves rather than somebody else from a central establishment or a central authority level making these programs. It could be programmed by the individual that I will be using it here and here, etc. So these are the advantages that are available. Yet another feature of a physical currency is that it can function even when a network is not there. You don't need a communication network or a messaging solution to be available for you to use a physical currency. Similarly, we can have offline features that are available in a CBDC where you can just, without the network or a messaging backbone available, make the payment. So those are the benefits that CBDC will offer, and those are the things that we can look forward to going forward as to many more use cases that are going to come. And of course, one biggest use case of CBDC will be in the cross-border segment. Just like for the cross-border, we have different payment systems that are being used. CBDCs will facilitate money being used, the physical money itself being used. When we carry physical currency and we move across borders, we use that to exchange. But here, without carrying this physical money, we can use CBDCs to complete a transaction that is cross-border. In fact, I feel the biggest use case of CBDC in a country's context, especially where they have payment systems that are very efficient, will be the cross-border usefulness of a CBDC. So these are some of the experiments that are being tried, and once successful, we will be able to definitely use CBDCs in a cross-border realm. Of course, there are certain things that can be expected where if the countries that are participating in such an experiment, if they have a CBDC, then how do we exchange the CBDC and for what value? And if they do not have a CBDC, then what do we do? So there are multiple options using which we can use CBDCs in a cross-border segment. So those are the things we can look forward to. But the pilots have been quite successful in telling us that, yes, there's a good use case, or there are many use cases available, even when a country has got a good payment system or a set of payment systems that are very efficient.
I think that was one of the questions I had, and it's the UPI system is so efficient that as a user, you're like, why would I use CBDC? And I think, like in China as well, it is so efficient, and therefore maybe the end user is somewhat hesitant to using it. But I think you also highlighted that the government is using it actively in public policy objectives, providing support and using CBDC. That, of course, can be another point. And then the most important part is in cross-border transactions. But when it comes to cross-border transactions, ultimately, there has to be a governance structure vis-a-vis other countries, right? And that governance structure still has to be formed because you need to find like-minded countries. Have you made any progress, or are there some initial thoughts of how best to do this?
It's a very interesting point you made, Alfred, that when UPI is there, why are we working on CBDC? In fact, many questions get asked and we end up being defensive to say that CBDC also has a different use case in addition to UPI. So we feel that the pilots should happen. And one of the other aspects I can highlight here is the technology that is used. The blockchain or the distributed ledger technology can be tried using CBDCs as well. So it makes us comfortable to use these technologies to see how best we can leverage them for our various purposes. I agree with you that when you do cross-border, the governance arrangements need to be perfect, because you are depending on the practices in a different country, you have a different set of practices. So there has to be a framework for these purposes. These are the discussions that are happening. You know, there are certain pilots or studies being done by the international organizations, including the BIS Innovation Hub, etc. They are all trying to see whether we can have a governance mechanism that can facilitate bilateral or multilateral engagements. But it is possible for us to have set up between two countries. Like, for example, we did between India and Singapore when we linked UPI and PayNow. We did arrive at a structure that was acceptable to both, including the stakeholders on both sides of the countries. Let me be frank in confessing one thing here, that the technological connectivity and other adjustments were much faster. The legal and other things took a lot of time. That's the important thing that we need to take care when we do cross-border. But once those disclaimers and clauses are in place, the other things can work very smoothly. And we are sure that these things will also happen. We are engaging with a couple of jurisdictions to see how we can have this cross-border use of the CBDCs. Retail, yes. Maybe for large value trade transactions as well. One of the benefits that CBDCs can give to a country like India is also that it can facilitate remittances to move faster. We all know that India is the biggest recipient of remittances. Last year, 2024-2025, we had around $135 billion of remittances coming in. And if those movement of remittances can happen faster and happen quicker and cheaper, which CBDCs can enable, then the country will really benefit. And India also has people who make some outbound payments for their wards, school and college fees, etc. Such payments can also be facilitated by outbound remittances using CBDCs. Governance structures are very, very important, and once they are in place, the transactions can be very smooth, including, we just imagine making some bill payments. If you are using a particular service in a country, like your parents are staying in India and you're working elsewhere, maybe in Singapore, and they are using certain utility services, it is possible for you to send money to them and then they make the bill payments. But it is also possible for you to make those bill payments sitting here in Singapore. UPI has been enabling them. There are other modes through which we can facilitate this. But when currency gets to be used for such purposes, then we are talking about a real digital revolution happening. So I agree with you. These governance mechanisms will take time, but when they settle in, they make everyone's life very comfortable.
I like the point that I've heard several times when you try to come up with cross-border solutions. It's not the technology that is the stumbling block. It's harmonizing standards and regulation. And of course, the other challenge is you can do it with one country, you can do it with two, but to do it with 200 countries, of course, that ultimately gets very, very tedious. But one thing that we're observing, and I'd be interested to get your views on this, is India's UPI initially was a domestic platform. But increasingly, we can observe, and you mentioned Singapore as an example, that we now have private app suppliers that are using the UPI platform, but are actually in Singapore, and they might be in third countries in the future. I was witnessing the other day how, with little information, I think it was the name and the email, you could make instantaneous transfers, initially even outside of the banking sector, to the most remote place in India. In a certain kind of way, I wonder whether maybe India's UPI platform could become somewhat of a regional standard that others are going to adopt.
You are absolutely right, Alfred. Actually, the India-Singapore linkage gave us confidence that we could try this out with other countries as well. There have been bilateral engagements, and what we have tried to do is when the Indian tourists move, we are trying to see whether they can try and take advantage of the comfort of UPI they were using in the domestic scenario to be also available for their overseas purchases or other payments. For example, Indian tourists visit Bhutan, even the Eiffel Tower in France is a very popular destination. We also had people visiting Mauritius, Nepal, Sri Lanka, UAE. These are the countries with which we already have now bilateral engagement so that UPI gets to be used not just for payments in a few outlets but across the country as well. Similarly, there are other engagements that are happening whereby UPI can be made available. And as I said, it is also possible for example, if you have a hub, we just connect to the hub, and the hub in turn will connect to many regional jurisdictions or countries within the particular region as well. Those discussions are also happening. And let me also tell you, there are at least 30 to 40 jurisdictions who are interested in implementing UPI itself as a payment system. They may have some payment systems of their own. In some situations, they are trying to import UPI into their country, but it is possible for UPI to facilitate a development such that if they have a system, we could also integrate our UPI with that system. If they do not have, then probably they could also directly have UPI as the main system as well. So those engagements are happening. These are countries in the African region. These are countries in the Middle East as well. So the possibilities are enormous. And we feel that the experience that Indians enjoy, and if that experience can be made available to Indians who are in different countries, the Indian diaspora that is there, as also to the global citizens, all the 8 billion of them, then the world will be a much better and seamless place as well. Within India as well, let me say, probably we have 1/3 of the citizens or population using UPI. So there's big scope for us to expand UPI to the other 2/3 as well. See, we had a survey that was undertaken 2 years ago, which said that around 40% of the people in the country use digital payments. There was this 60% which said that we are not using digital payments, of which 35% of the people said that we are aware of the benefits of the digital payments, but we are yet to use. So there is one segment where we can actually push digital payments and make them comfortable. But the important aspect that we learned was that 25% of the people said that we are aware of digital payments, but we do not want to use them because we are scared of digital frauds. We are worried about our money taken away from our accounts. That is a segment we also want to concentrate and give comfort to the people that your money will be safe because there are enough safeguards in the system to keep that money safe. You don't do anything foolish by sharing certain critical information like your PIN or passwords, etc. As long as you take care of this segment, then the system will take care of ensuring that your money is very safe. And the Reserve Bank has been very proactive in putting certain expectations. For example, let me diverse a little bit to say that we have this two-factor authentication that was first brought into the country. One of the earliest jurisdictions to bring in a two-factor authentication, whereby for every payment that you make, you have to give a PIN or something that is known to you only. Only then the transaction will get completed. That has really helped India in making our payment systems safe and secure, as also giving confidence to the users. A couple of other things we have done is that for every transaction you make, you will get an SMS or an email alert after the transaction is done that this money has been debited from your account, as also the beneficiary has received the money. That is again giving confidence to the users. And UPI, one more feature is there whereby before you decide to transfer the money, moment you enter the mobile number or the virtual payment address or any other detail that you have of the beneficiary, you will also get to know the name that is being there. So you are confident that you are paying to a verifiable ID. Similar comforts we have now brought into the NEFT and RTGS payment systems as well, where you can verify the name before you pass on the money. And over a period of time, certain other benefits. For example, in UPI, there is something called as Unified Dispute and Issue Resolution, UDIR, whereby because everything is well connected, all the stakeholders in the UPI system are well connected. If your money doesn't reach the beneficiary or if there are some hiccups in between whereby the network gets lost, it is possible for you to raise a complaint on the UPI app itself. And the entire complaint gets resolved through the system. You don't have to do anything more. There is a well laid out procedure for each of the stakeholders in the UPI system to follow a particular protocol so that the complaint gets resolved. And believe me, if the complaint doesn't get resolved within a particular timeline, the stakeholder will also have to pay some additional penalty to the users. So these are the benefits which have been accruing to the users in the Indian ecosystem. And we want to ensure that when we do this cross-border and other linkages, the other jurisdictions do not just get the system, they will also get the perspective behind which we have set up these systems. As I said about interoperability, about customer centricity, and giving comfort to the users whenever they are making a transaction. So those packages are a set of comforts that are available, will all be given in when we are giving these solutions. So these are the engagements we are having. And believe me, over a period of time, the Indian payments ecosystem has become very safe, secure, efficient, and robust as well. See, the UPI performance is being so closely monitored at the end of every month, whether there was an increase vis-a-vis the last month, vis-a-vis the previous year, etc. Similarly, what is being watched is the performance of different stakeholders in the UPI ecosystem. For example, NPCI publishes the downtime of each of the stakeholders, whether during a particular month the systems, the apps were available. Similarly, the NPCI ecosystem also publishes about UPI availability. In the last 3 months, I was saying that the UPI availability was 100%. This is very difficult to maintain, but also a comfort that the users will get that when they need the system, it will be available. And that is being ensured. I feel over a period of time, everybody's comfort has increased because these benefits are available and the expectations will also increase, but we'll have to rise up to the challenges to see that these are done. And for all these things, we have also, from the Reserve Bank, from the government, have put in place certain protocols, certain procedures, certain frameworks. These are all part of what you were calling as governance arrangements in a cross-border. Similar governance arrangements are there within the country as well. We have a very robust Payment and Settlement Systems Act as well that facilitates Reserve Bank of India to exercise control, authority, regulate, supervise all the payment system operators. I hope I was convincing enough to you.
What I'm hearing is two key messages. On the one hand, you've been very successful domestically, but there's 60% of the population that you still hope to reach going forward. So humongous growth potential. And the other one is, and this is maybe for other countries to watch, it might very be true that in the cross-border use, maybe India's UPI could become something of a standard given the level of development. But I do have to ask you one question, that's the white elephant in the room. India, as other countries, including China, banned cryptocurrencies. As a matter of fact, I think one of the big arguments for moving forward with a public option, the CBDC, was to have a public option compared to cryptocurrencies. But now with developments in the United States and the Genius Act that was approved to give regulatory guidance for stablecoins, is there now renewed pressure domestically to reconsider and maybe to allow stablecoins going forward? And where do you see kind of the pros and cons?
It's a very interesting question and very contemporary as well. But I don't want to venture into what some jurisdictions have done in terms of legalizing either cryptos or stablecoins, etc. But I want to put in perspective some of the thought processes that we have been having. For example, we have a very efficient payment system. We really don't feel that the cryptos are required to fulfill this requirement of completing a payment transaction. Cryptos are very volatile, as we have been seeing the valuation of the currencies, so as they are called. We also have this approach that they are definitely not currencies because they do not fulfill the basic definitions or dimensions of currency in terms of being a store of value, being a unit of account, or also being comfortable for use in transactions. Cryptos are just a code, and it's very difficult to call them as an asset because they don't have any cash flow. We also do not get comfort to call them as a commodity because they are not tangible. And of course, the major crypto doesn't have an issuer as well. The purposes for which crypto gets used, as we can see, is when they are invested into for speculative purposes to gain from the valuation, as also maybe to derive the lack of controls and the benefits that could be accrue to some of the users from bypassing AML or CFT or even proliferation financing related aspects. And between cryptos and stable coins, if cryptos do not have any asset backing to it, stable coins have an asset that gets backed. That's why the word stable gets added to the stable coin. And that asset backing could be a currency like the US dollar or the euro, or even could be the South Korean won, or maybe tomorrow the Indian rupee as well. So they are just some asset backing the stable coin. It could be a debt issued by the sovereign as well, that could be a backing. What is being tried is that they want to retain the value of the stable coin by saying that it is pegged to a particular currency or a particular asset, and that issuer will also need to ensure that this particular peg is maintained. There were those situations that were seen recently when one of those private sector banks in the US failed, whereby the peg that was there to the stable coin also got depegged. The value of the asset was totally different from the value of the stable coin. So it is not necessary that the moment you peg, you are able to retain the value of the stable coin. The thought processes we have is that the stable coins continue to be a private issuance. It may be treated as money. Just imagine a situation where there are hundreds and hundreds of issuers of such stable coins, and each one becomes currency or a money in a particular country. You will have the same issue of so many currencies fighting for a place, and how do we value one currency against the other becomes another problem as well. I always felt that the issuance by a private entity of stable coins may actually end up being the responsibility of the sovereign or of the central bank to see that the value of the peg is maintained. So we are fighting for a lost cause already. And there have been a couple of instances in the recent past where stable coins have not lived up to the valuation because they have gone bankrupt as well. So there are these challenges. And of course, one of the bigger issues we are seeing is that most of the stable coins presently have the dollar as the asset backing it or the currency backing it. In fact, over 99% of the stable coins have the dollar as its backing. So we are ending up in a situation where we are dollarizing the ecosystem if those stable coins get used in a domestic environment. Like, for example, India or maybe even China, we have some controls or restrictions of movement on the capital account. On the current account, we may be having movement, but on the capital account, there are convertibility related challenges. If those challenges are there in use of the physical dollar, those challenges could be circumvented, or those issues, hurdles could be circumvented if the digital dollar by way of stable coins come in. And those are the challenges those countries have to take. So as I said, each country should have the freedom to decide as to how they will regulate cryptos or even the stable coins. So typically we have cryptos that are unbacked and the stable coins that are being backed. And now we are also hearing a word called as payment stable coins, where the stable coins will be used only for payment purposes. So those are the developments that are happening. Every country has to be careful, watchful about what is happening elsewhere, and also tailor-make its regulations and guidelines to safeguard its own interests. Incidentally, I am drawn to the summary or conclusions that the BIS Annual Economic Report 2025, the Chapter 3, that had mentioned about the fact that stable coins do not fulfill the basic tests of singleness, elasticity, and integrity of money. And they also have said that the fundamental risk is that of currency substitution, which may not be significant for advanced economies, as most stable coins are denominated in the local currencies, thereby adding to the influence of the dominant currencies. Incidentally, I did read some commentary about how European Union is also worried if these US dollar-backed stable coins enter their ecosystem. So there are these challenges, and we have to wait and watch how these pan out. And as I said, there are two sides of the story which we have to listen to. There are those private investors or private entities who are proponents of cryptos and stable coins. There are equally a good number of institutions and sovereigns who do not like these concepts of cryptocurrencies or stable coins coming and impacting their stability.
So kind of in summary, maybe two things from India's perspective, somewhat more skeptical about the benefits of stablecoin for India. At the same time, I think you're also alluding to one will watch developments going forward.
Yeah, skepticism is actually a negative word. I am saying that we are being realistic, that these instruments or these new discoveries are not fulfilling any useful purpose. So I'm not saying that the other side is propagating while this side is being skeptical. I'm only trying to present the story that is actually the reality.
Thank you very much. This has been fantastic. I know we'll continue the conversation on many occasions, given the speed with which these developments are taking place, both within India, increasingly, potentially also in the region. And India's ecosystem is moving ahead rapidly. And of course, I wish the RBI a lot of success in reaching the last 60% of the population. Tall order, given the size of the country.
Thank you, Alfred. It has been a pleasure talking to you. I also wish all the listeners a wonderful time ahead using nice, safe, and secure payments. Definitely not cryptos or stable coins, so to say. Thank you very much.
With that, I would like to thank you, Vasu, for joining me today. Once again, I'm Alfred Schipke of the East Asian Institute in Singapore, and you have been listening to East Asia Pulse. To learn more about our work and stay connected, you can subscribe to our mailing list, which is available on our website, or LinkedIn, YouTube, and Twitter. Thanks for listening to us, and until the next time, goodbye.